Welcome to the LeMiuex Center for Public Policy at Palm Beach Atlantic University. I'm George LeMiuex, and it's my great privilege to welcome Steve Forbes, the chairman and editor-in-chief of the Forbes Media Group. Thank you so much for being at Palm Beach Atlantic.
Good to be here, Senator. Thank you.
Lots of things going on. I don't know that we could find a time which would have more interesting things to talk about in government and politics. We have a new president who will be inaugurated on January 20th. Donald Trump will become the 45th president of the United States. How do you think those first 100 days will go for our new commander-in-chief?
I think he's got to overcome the growing caution on the part of Republicans, both in the House and Senate. Tell the Congressional Budget Office, take a vacation. We're going to go for a big tax cut. I think they have to do both personal and business at the same time for political reasons. So you're not favoring business, you're doing both at the same time. And on health care, repeal, it doesn't mean you change Medicaid, where most of the new insurees have gone, 16 out of the 20 million, and keep the other safety nets in, but you can get rid of the individual mandate, the employer mandate, you can get rid of the taxes and some of the other obnoxious things that have really been harmful, and then move forward. What he needs to do, since the media is against him, he truly is an outsider, he's going to tweet, which is going to always have dust-ups. He's got to get political capital. And if he can show within 6 months that he's gotten a couple of big things done and the economy is, people feel it visibly in their paychecks, then he's got the capital to survive the inevitable stuff that comes your way.
Sure. So let's unpack some of that. You mentioned taxes, and you have been a leader on tax reform from both of your times when you sought the presidency to your writings in your magazines. You're the flat tax guy, and for some reason Washington hasn't gotten that message. Do you think we've got a chance for a flat tax under President Trump?
I'm looking forward to it. When I wrote a book on the flat tax over a decade ago, he endorsed the book, said it's a great idea. Talked to him a couple of weeks ago. He said, I haven't forgotten it. We're moving ahead. So I hope what happens with Trump is what happened with Reagan. As you recall, in 1981, when Reagan came into office, he had a big tax bill in 1981. 5 years later, he had another major tax bill. So I hope they go for just focus on tax cuts now and the first bill, because you got to get this economy revved up again in a positive way. And I hope in the next 2, 3, 4 years they'll have a next bite at the apple and go for radical reform in terms of changing the code. Because if you get the economy moving, then again you have that capital to go for something really big, because you're going to have a lot of special interests gunning for you if you try to change the code. But if you've got the wind behind you, because of a good economy, as Reagan discovered, a lot can get done.
A lot can get done. And you just wrote Reviving America, which came out before the election, but is really, in my view, a very easy to understand roadmap for the president-elect and Congress.
Thank you.
On what to do. And what I was so taken with, because I've always been someone who thought that the tax code should be flatter and fairer and easier to understand, is how much GDP would grow under a flat tax. That really was breathtaking to me. Can you talk about that a little bit?
Yes, when you enable people to focus brain power and resources on creating resources rather than coping with the code, and 40 countries and jurisdictions around the world have had experience with a flat tax, so we're not talking theory here. You're talking about literally hundreds of billions of dollars of extra GDP. If you go out 10 years, you're talking about a couple of extra $1 trillion. And that is remarkable, but when you realize we've been growing at 2% in the last 8 years, or even 10 years, 5 or 6% is not out of line to get up to our basic historic average of 3.5%. So you're talking about not only people keeping more, but people able to do more productive things and creating more opportunities. And it's a moral issue, which I'll be explaining in the lecture. If you add up what we spend, the billions of hours a year, IRS estimates at $6 billion. Experts estimate we spend $200 billion a year at least complying with this code, and go back 20 years when we first put this idea on the table. Of all those tens of trillions of hours, literally billions of hours, trillions of dollars, and immense brain power have been going for new products, new services, new medicines, how much better all of our lives would be. What the economists call opportunity cost is enormous. So this isn't about GDP and 3% or 4%. That's a way of measuring. what should be a much richer, more productive, exciting, opportunity-laden society than what we have today. And it's a travesty. It's like telling people, go out, dig a ditch, and fill it in. It's not making us all better off.
Well, and to your point about the president-elect being bold, this is certainly something where you need bold leadership, because behind every tax exemption and tax giveaway stands a lobbyist and a special interest group, and that's something that really needs to be changed. You also talk in Reviving America about repealing Obamacare, and that's a big topic. I mean, in many ways, this president was elected on that issue. Congress continues to be Republican-dominated because of that issue. And now you hear about repealing potentially and replacing later. President-elect has talked about, well, we got to keep the no pre-existing condition. What's the way for Congress to get this done in a market-friendly way that's going to actually transform healthcare?
Well, fortunately, even though you'd never know it from the headlines of the way Republicans have been behaving recently, there's some very good ideas on how to do it. McCain had one in 2008. The Republican Study Committee in the House of Representatives has a 186-page bill ready to go. And the key thing on terms of the safety net, which is the real big issue, is tax credit maybe, but I prefer something like what the study committee has proposed and that is high-risk pools, insurance pools, where if you really can't get it because of a chronic condition or whatever, you will be covered. We do it with food. It's called food stamps. Put aside how we administer the program.
Sure.
The idea is nobody starves. So why not do the same thing in healthcare? Food is more basic than healthcare. If we can do it there, provide the safety net in healthcare, get more real free markets and entrepreneurship, and get the best of both worlds. And we're so accustomed to the system we have, we don't realize how strange the thing is, where you don't know the price of what you're getting.
Right.
Hospitals don't know what the real price is.
Right.
And so you can't expect, so this top-down approach is guaranteed. The Soviet Union failed for a reason.
Yeah.
Top-down approaches don't work.
I loved your analogy to Soviet-style healthcare. And I also, the point that you made that there are two types of healthcare that have been working, which is LASIK,
Yes.
the eye care, and then cosmetic surgery, none of which are reimbursed by insurance or paid for by Medicare or Medicaid. And lo and behold, the prices come down.
They come down because the providers know that if they don't have something attractive, more attractive, better, they're not gonna get your business. So you take cosmetic surgery, unless it's a result of a disease or accident, it's between you and the provider. And so you haven't. And you see it in other areas in terms of delivery. For example, flu shots. Once upon a time, if you wanted a flu shot, you made an appointment. You went to the doctor or the clinic. It was a big deal.
Right.
Now you go to a drugstore, airport, gas station. I mean, you get the flu shot. So I think you're going to see real productivity. The productivity hasn't paid off before. Hospitals know that their revenues depend on how well they negotiate with Medicare, Medicaid, and insurance companies and employers. So if they make you as a patient unhappy, it's not going to affect their revenue. But if you get more patient control, and with the rise of these high deductible plans, President Obama doesn't realize he's contributing to a radical change of free market health care, because these plans that he has on the exchanges, where the deductibles are catastrophically high,
Right.
5, 10, 15,000.
Right.
People are suddenly aware of what this stuff has cost on paper. And providers are going to realize that people are going to start to compare.
So he's educated the marketplace.
He's educating the marketplace. So I think you're going to see the rise up. And this is what I hope our Republican colleagues recognize is, in terms of Medicare and Medicaid, don't attack them now. Leave them alone. If you get a real free market for the 150 million people who are not on those programs, you're going to create conditions where people on Medicare in 10 years, I guarantee you, will say, why am I forced to go into this? I want these alternatives.
Absolutely.
And so go with the low-hanging fruit, and then you can outflank. Because when you start talking about Medicare and Medicaid, people think you're going to take something away. That's not a winner.
Right.
Go with what people are going to be
smart.
happy with.
You also talk about in Reviving America monetary policy, and we've seen the most expansive monetary policy over the past 5 or 6 years that I think we've seen in this country's history. How are we going to change that with these quantitative easing programs, the flooding of money into the money supply of the world, other central banks around the world doing similar type programs? What's your prescription for monetary policy?
Well, what has happened in recent years, they've changed the whole paradigm, so to speak, on monetary policy. Normally, what they called high-powered money, when the Fed created a dollar, the banks leveraged it, so one became 10, 8 or 10. That chain has been broken because of regulation, thanks to Dodd-Frank and what the Fed has done, and also suppressing interest rates, not just on short-term, but long-term as well, combined with the Fed gobbling up every government bond out there, has created severe distortions in the marketplace. Life insurers especially have been severely hurt by this. Pensions, as you know, they now have to create artificial assumed interest rates because otherwise they'd all be bust, even the healthy ones. So they've destroyed the marketplace. And as a result, when you have that, large borrowers, government, large companies, easily get credit. Whereas small and new businesses, very difficult. Even mortgages. You can get a mortgage, but by golly, you go through as if you're signing your life away. Week after week, paperwork, they've got to do this, cover themselves 6 ways to Sunday. So you have a system where now businesses are closing doors faster than their new ones are opening doors. And that's
really the first time in modern time that's happened,
yeah,
where more businesses are closing.
Since the brief period it happened in the 1950s. And that's why you got to start by having the Fed run down their bond portfolio. The Fed, in effect, without a peep, seized $4 trillion of assets. They now control over $4 trillion of bonds and mortgage-backed securities. They just took them. And in effect, banks are financing it. So about 18% of bank assets are now financing the Fed's, I think, immorally seized portfolio. And so what the Fed, at the least, for starters, let that portfolio run down. When a bond becomes due, don't reinvest it. Let it go back into the financial system. Easy. Make them do it. The other thing they have to do is, instead of trying to control interest rates, let lender and borrower determine what the cost of money is. And people will say, oh, well, that may be, rates may go up, but you'll have more credit. It'll be more easily accessible.
And that's the lifeblood of the economy, right?
That's the lifeblood
credit.
of the economy. And we point out in the book, reminds what the Fed has done, reminds us of the old saying in the Soviet Union, healthcare is free, but you can't get any.
Right.
And so Apple can borrows, even though it's loaded with cash, goes out and borrows tens of billions because, why? Because it's free.
Right.
Why wouldn't you do it?
Right.
Exxon, the same thing. So it's a skewed system. So you start there where you can get real credit markets again. Ultimately, I think we're going to go what we had before the 70s, and that is a Bretton Woods type of gold standard. And when people don't understand with gold, it's not gold coins. It's like minutes in an hour. It's like a ruler. It's a fixed value. Gold, for a variety of reasons we explain in the book, its real value does not change. Which is, when you see the prices fluctuate, that's the dollar changing, that's the euro changing, now and in the future. So if you understand gold as a ruler, you don't get hung up, oh, we're going to have gold coin. No.
Right. We don't have to have Fort Knox stocked with all of the gold.
No. In fact, we point out you don't even need to own an ounce of gold to have it fixed in value. You just keep it to the price, 1% up, down, whatever. But
it's a
very
measurement
basic.
tool.
It's a measurement tool, exactly. It's like a yardstick. So having 12 inches in a foot doesn't restrict the size of a building you may wish to construct. It just means you have a fixed measure to know what you're doing. Same thing with money. I'll compare it tonight to, like, imagine you floated the hour. 60 minutes in an hour one day, 40 minutes the next. Life would be chaotic. So you want fixed measures. Works in the marketplace. 16 ounces in a pound. A gallon of gasoline. You don't have to worry whether it's the same gallon today as it was yesterday. It's fixed. You can focus on productive things instead of, oh, am I hedged on gallon size of the gallon changing?
Okay. Well, let me just finish up. It's been our pleasure. Steve Forbes, thank you so much for being with
Senator.
us at the LeMiuex Center for Public Policy. And tune in next time when we bring other thought leaders from around America to speak with our students and stakeholders here in South Florida. Thanks so much.